Hey, come here. I have some very important information for you. With over 400 stores across the United States, Costco is one of the largest pizza chains, and it has a super duper snazzy robot to apply the pizza sauce. Hey, what's poppin', y'all? I'm Russ here. This is the Dapper Dividend's YouTube channel, and we've got another portfolio update for you. But if you don't want to wait for the portfolio update videos or the free weekly newsletter that you can subscribe to by clicking on the link below, you can head on over to getquinn.com, also linked below, and check out what's moving and shaking with the combined 3 portfolios that we share on the channel. But before we get going, dear dividend investing viewer, I want you to share with all of us in the community in the comments below what you have been buying and selling. Now, in the month of February, we received $14.25 from Starbucks, a big whopping $179.14 from our biggest position, Nexstar Media Group, ticker NXST, $55.80 from AbbVie, $122.10 from the one, the only AT&T, $9.77 hitting our pockets for the last time from Energy Transfer, ticker ET, $47.20 from Realty Income, and $36 from Main Street Capital, which both Realty Income and Main Street Capital are monthly dividend paying companies. Now, don't call me crazy, but we did get $51.50 from Enterprise Products Partners, ticker EPD, and for the very last time, hint hint, $1.32 from Albertsons, ticker ACI, for a grand tiddly total of $517.08 in dividends for the month of February. Now, we did have some sells. We sold out of our position of Duke Energy, ticker DUK. We sold our 15 shares at an average price of $92. And on Duke, we had a cost basis of $83.89, so we were up about almost 10%. Not including dividends received. Now, Duke Energy hadn't moved a lot. They are more like a bond proxy, and it's a very capital intensive business. As I've been evolving as a dividend investor, I've been moving away from very capital intensive businesses like Duke Energy and AT&T, ticker T, which we've really started selling off. 144 shares sold at an average price of $17.65. Our cost basis is in the low 20s. I just think it's time to wind down this position, doing it slowly instead of just ripping off the band-aid all at once. We also sold out of Warner Brothers Discovery. I got tired of waiting after we received these from AT&T when they were spun off. We sold our remaining 28 shares at an average price of $9.77, and we kept the consolidation party going by exiting out of Energy Transfer, ticker ET. Now, this one we started buying just after the COVID crash. We had 31 shares at an average cost of $6.19. So yeah, we're up 137% on those shares and had a yield on cost of 20.36%. But I just thought it was time to consolidate, and we weren't adding any more shares. I would much rather own more Enterprise Products Partners. So we sold ET. We're going to sit on that cash for just a little while. We decided to give up waiting on Albertsons and Kroger to merge, ticker ACI. We had a cost basis of $16.53. So we were up about 29%, not including dividends received, but we weren't adding any more, and it was just time to also consolidate and move on from Albertsons. So in the month of February, we reduced our position holdings by 5. And on to the buys. We bought 3 shares of Starbucks, ticker SBUX, at $92.69. 4 shares of Nexstar Media Group, ticker NXST, at $156 on average. And we bought those when there was a bit of an overreaction to the Fox, Disney, and Warner Brothers Discovery joint venture streaming app for sports, but Nexstar would actually be able to opt in for the carriage and all that, so it would create a bit of a new revenue stream for them as well. We bought 9 shares of Johnson & Johnson, ticker JNJ, at $156.40. The new position we started, Agree Realty Corporation, ticker ADC. We bought 10 shares at an average price of $56.02. And as we we see here on CEObuys.com, Joey Agree, who is the CEO of Agree Realty, has been buying quite a bit of shares going all the way back to the month of May. He's bought just over 40,000 shares since then. And I love when CEOs buy their own stock because they think it's undervalued or it's only going to go up. So yeah, they're buying for one reason. So I decided to finally start the position with Agree Realty, which is kind of like Realty Income's baby brother, and they have a lot more runway for growth. And they pay monthly dividends. We got up to 200 shares of Realty Income, ticker O. We bought 14 shares at an average price of $52.87. One little old share of Vici Properties, ticker VICI, at $29.33. 2 shares of Toronto Dominion Bank, ticker TD, at $60.10. And last but not least, the non-dividend paying company, Harrow Incorporated, ticker HROW, 5 shares at an average price of $9.30. We made a few more moves today on February 29th, so this has not been updated in Simply Safe just yet. And we have almost $6,000 in cash, but the current yield on cost, which has come down a little bit, 5.13%. But when we're thinking about total return over many years, I'm just not that worried about it. And if we sort by percentage of portfolio, we got Nexstar Media as the number 1 position with an 11.5% share. If you want to look at any of these words closer, you're going to have to pause the video because we want to go quick here. We see PepsiCo, those 100 shares we still got. J&J in the number 3 spot. SCHD4, Realty Income, those 200 shares we officially have now will be paying us $615 every single year. Toronto Dominion, 150 shares. Ares Capital, ticker ARCC, and Main Street Capital, BDCs, coming in next. Altria, 160 shares. We eventually plan to wind those down, but as you see, we have an average cost of $43.83. My wife and I decided, while it is a sinvestment, that we plan to exit when it's about $44 a share. AbbVie, we just haven't really bought much of. It's just been sitting around for years now with a cost per share of $89.60. AT&T, we're under 300 now because we sold another 50 today. ExxonMobil, Lockheed Martin, Vici Properties. We'll eventually get to 150 shares of Vici Property. Lockheed, not sure what I'm doing with that one. We do hold it inside of SCHD. We do actually need a car we're going to be looking at buying here for my daughter who just got her driver's license, so congratulations. So that may go toward a vehicle, but we will see. Prudential, we like Prudential. They've run up too much, almost $110 a share. Would like to add more of those under $90 if it ever gets there. McDonald's, same story as Lockheed, just 10 shares, been sitting there forever. $176 per share cost basis on McDonald's, so very nice, 3.77% yield on cost. Enterprise, we do intend to buy more Enterprise, but again, I would really like to see that closer to 25. We'll see what happens there. Starbucks, that may be one that we get to 100 of and consolidate a few more positions into. Chevron, again, just kind of hanging out, figuring out what we want to do with it, but no hurry to sell. That's the beauty of this. We just get paid to wait while we figure out what we want to do. But Leggett & Platt, down 41%. I think I'm going to hold on to Leggett & Platt and wait for things to kind of restabilize, see if they can come back up in share price, which I think they will, but it's going to take some time. LyondellBasell, 15 shares at an average cost of $75. Simon Property Group, thinking about selling them. They seem kind of fully valued at $150 a share. I'd love to know your thoughts on Simon Property Group. Harrow Incorporated, 110 shares. They don't pay a dividend. I think they're going places. It's going to take a lot of patience, a lot of time. They do ophthalmologic, eye drugs, eye care. Mark Baum, I really like their CEO. So this is a case of yours truly betting on the jockey and hoping he can get that horse to finish number 1. Innovative Industrial Properties, we're way down on the 10 shares we have remaining. If you remember, we sold off a bunch. Diageo started this position around $140 a share. Want more of it there, and we've been letting cash build up in the Roth where we hold it. And then again, Agree Realty, we have 10 shares. We bought 4 more as of today of this recording. And that one, we're going to get to 100, but the cool thing, I'm going to be using the Realty Income and Main Street Capital monthly dividends to buy at least one full share of Agree Realty every month. And there you see the cash. We have almost $6,000 of cash available just waiting. You know I want your thoughts and opinions, so please don't forget to share it. Consider liking and subscribing to the channel if you found it helpful. And if you'd like to know why we can't stop buying Realty Income in this floating little box next to my head, click it and I'll tell you all about it there.